Today feels like the apocalypse if you go on social media. Happy Thursday. Hopefully everyone is doing great. We have a lot of stuff to talk about in this video, and yeah, it really does feel like it is the apocalypse if you go on social media, which, once again, that means that you got to be buying this market. Because when social media is just very fearful around certain names that you are in, you got to be pulling the trigger. But yeah, I wore my Darth Vader shirt just for today's episode because it feels like the Empire has taken over a lot of these phenomenal companies. Or have they? And maybe it's just, a little bit of deception, short-term noise. Welcome if you are new. I keep things very real on this YouTube channel. Not to mention this channel is relatively new. My main YouTube channel, Nightmare RH, has over 200,000 subscribers. Going to be advertising this channel probably maybe in a week and a half, maybe 2 weeks. So if you are a daily active viewer of mine, we're going to be getting a bunch of baboons over here. Hopefully good baboons. I'm a baboon myself. And by the way, electrolyte water cheers. Going to be another hot and humid day, not to mention another track running day for me, so got to stay a little hydrated, especially when video making. I am video making super early today at 9:53 a.m. Eastern Standard Time. Kind of really want to make a video straight off the bat because we have a lot of stuff to talk about, so as always, if you find value in today's episode, smash the like button. If you want to subscribe, I put out videos Monday through Friday on this channel. All good stuff related to the stock market, related to geopolitical stuff as well. I'm also doing a public profile challenge, which I'll get to in the second half of today's video. I did sell some stock here today, and I did buy quite a few names as well, too. Going to be talking about why. Otherwise, as always, yeah, here we go. Okay, so earnings, right? Yesterday's video, if you are in SoFi and Robinhood, you should definitely watch yesterday's video. Ended up gaining a couple subscribers from yesterday's video, so welcome once again. SoFi, I talked about SoFi, honestly, for the last two videos. I'll talk about SoFi near the second portion of today's video, but going straight off the bat with four big names that ended up reporting earnings yesterday. Microsoft, okay? Microsoft came in. Obviously, Microsoft did very well. I mean, hey, EPS, revenue, guidance. What is really the issue with Microsoft? It's really primarily about their expenses that the market is very much saying, you want to know what? We're not really kind of feeling it per se. On the other hand, Google utterly killed it. Now, Google has just done the unthinkable, and they have actually raised their CapEx spending, capital expenditure spending. You have companies that are spending a tremendous amount of money on building data centers. A data center is nothing more than a gigantic warehouse filled with computers. Obviously, these companies are very much virtual, and in order for them to grow, they need more computers, aka servers. And they also need to hire more people to watch them. They need to hire more people to build a facility, and they need to spend more money. So they're raising from 180 bill to 190. But here's the thing about Google. It's showing in a very positive manner on their balance sheet. Yes, their costs, their expenses are rising, but their rev is also rising, and it's making people very happy. Okay? Very, very happy indeed. Same thing with Amazon. Amazon is also seeing a rise in their AI service, their AWS, basically pretty much the AI portion of Amazon. Amazon is seeing a rise. Obviously, we're getting a little bit of pullback here right now since the market is open. Right now, it's on the 5-minute time frame. Obviously, Google is on the 1 day. Let's go to Amazon right here on the, oh boy. Oh, you have got to be shitting me, man. My internet just dropped. You know, good thing I'm not friggin' live streaming. And also good thing I don't need my internet to actually go ahead and make a video. Hold on. I got to turn on my hotspot for my cell phone. There is a very big problem with my ISP, and they're going to be getting my foot up their ass. I honestly don't understand. Apparently it's my entire block, my entire street that I'm on is undergoing some internet problems. My neighbors are actually experiencing the same bullcrap. But yeah, ISP internet should not be going down in friggin' 2026 here. Anyways, Amazon on a daily chart here. I mean, all-time highs, phenomenal company. I was actually looking at Amazon and Google, buying it, during Liberation Day last year, but I ran out of cash because there was just so many friggin' great opportunities that I ended up picking up. I didn't dabble in Amazon or Google this year, but I mean, Google and Amazon, they're obviously big winners. And Microsoft, I am extremely bullish myself, especially on SaaS software. But once again, Microsoft, along with software, they're very much in a unique little bubble. Now, on the other hand, my stock that I own on this channel, Meta. We got some problems. Oh man, it's some problems. Now, here's the thing about Meta. Ultimately, I am very bullish on Meta. I've been in and out of Meta, in the last, 4 years now, quite a bit of times. I have not made life-changing money on Meta, but when it comes to actually total profits, I definitely want to say above 5 figs. If I had to put a real number of profits, I'd probably say maybe between, on the low end, 13, 14,000. On the high end, maybe 17, 18 grand of profits. Swinging Meta short term, I've done. And I've always came out swinging with Meta. I actually, when I used to really dabble in, very much long-term options, not so much anymore. In a way, leaps, pretty much did good on Meta as well, too. But here's the thing about Meta. When they go on a spending spree, they go on a spending spree. Primarily their CEO. But their CEO is a innovator baller, and the guy is just one of those unique individuals that does not lose. Very much like many other well-known people out there. The guy just, you know, it's when it's going to one of my favorite books, The Art of War, which every single person should read. I have military background. I ended up reading The Art of War very young. I'm 37 now. I believe the first time that I read The Art of War, it was right after I got done with boot camp in the Marine Corps, and I was 19 years old. I'm going to butcher this quote, but it's pretty much, when you are at your strongest, convince people you're at your weakest. When you're at your weakest, convince people you're at your strongest. And Mark Zuckerberg does this. He's one of these individuals that definitely does it, among many others. And he does it very well. However, the stock is just very much like trading very decently. So until this stock very much like crashes, don't really expect pretty much like a pullback on CapEx. Now, Meta went from spending 125 bill, now they're up to 145 bill, and their expenses are rising, and they're not really seeing a lot of their revenue very much exploding. Now, obviously, the management team believes that if they spend more on CapEx, maybe that is going to push up revenue. Do you believe it? If you believe it, right now, a Mag 7 company is down nearly 10%, it could be a great buying opportunity. Me personally, I ended up selling another share of mine, a Meta, I have actually scaled out of my Meta position over the last couple months, and I've rolled that money into other positions. I really honestly friggin' can't stand Webull sometimes because it's not showing my recent trades on here. It's like a delayed reaction. Keynote to self, I may honestly transfer my Webull account to a brand new Robinhood account because like it's annoying. By all means, Webull is utterly amazing for day trading and also waking up at 4 o'clock in the morning to actually buy some stock, but as for loading, it's not necessarily the best. So, if you are new here, like I said, welcome. I'm doing a public account challenge, taking this sum of money to 6 figs in the course of 17 months. The account challenge started 2 January this year, and we have been rock and rolling. The account is, up still 8%. Last week it was, or I honestly should say a couple days ago, it was actually up by, I believe, like 15%. This past Friday. Over a month ago, the account was, down by 15%. So things can move very quickly. Now, my Meta position used to be close to about, I believe, $6,000 for a cost basis. I ended up selling one share here. I was up by like 6%. I ended up cycling out some shares of Meta when I was actually closer to 15 and 17%. And the reason being that I scaled out of my Meta position, which I'm literally up by just puny little, percents, is because the management team has changed course. And this is something that I've been talking about on this channel for the last several months since I've been posting content. Last 5 months-ish, 5-6 months. If you are buying a company, and if the management team changes course that is different than your strategy, you gotta stick to your guns. And you got to be disciplined to say, hey, maybe I don't want to put this much into this position. Maybe I want to roll some other money into different, areas that have different opportunities. Before Meta's earnings of Q4 2025, so January, Meta released its earnings. Let me double check. Was it January? It was, 28 January. These companies didn't post their earnings for their capital expenditures that they were posting, pretty much. So the whole thing about it is that a lot of people were very blown away that we're extremely bullish on Meta for 2026, including me. I actually had a price target on Meta before their earnings in January, pretty much getting to like potentially $1,000 as a very much bull case. A base case is that Meta was going to be $800 by the end of this year. That's probably not going to happen if their balance sheet is going to show more expenses and their revenue is not really very much increasing like a lot of people really want it to be. And it's putting a hurdle, especially around the stock and especially around the management team. And it's also making Wall Street very much think twice about, hey, is this magnificent company really a 2026 opportunity? However, understand that the companies right now to very much be in are hardware and software. I'm extremely bullish on hardware and software. Why? Because you have companies like Meta spending a tremendous amount of money on hardware and software. You have Amazon. You have Google spending a tremendous amount on hardware and software. AMD is a place to be. SaaS. I'm in Adobe. I'm in ServiceNow, Oracle. Even Palantir, you can argue, is very much software. So what did I end up buying with my one share of Meta? I ended up buying a ServiceNow share. Actually, I bought 2 ServiceNow. I bought 2 Hood shares. Then I also bought 19 SoFi shares. So I ended up automatically rolling that money into more opportunities that I see producing a very much bigger return this year. Now, why don't I completely sell out of my Meta position? One is because Meta is still a phenomenal company, but I don't want that much exposure to Meta. I'm okay with having, which is now on this profile, a 35%, utterly crazy, right? Obviously, that position size is going to be very much going down once all these software companies start rock and rolling again. Not to mention SoFi takes off as well, too. But right now, I am perfectly fine being in AMD and having that as a 1/3 of this profile. Now, if this profile was 1/3 of Meta, that would be very much different. That's basically pretty much what I'm thinking and what I'm personally doing. As always, I'm not a financial advisor here, but take this with a grain of salt. And if you disagree, hey, stick to whatever strategy that you have. But me personally, I would very much rather have more money in hardware and software than actually Meta, Amazon, or Google. Now, Amazon and Google going up past all-time highs, that's extremely bullish. But understand that when a company spends a large amount of money, ultimately it does show on their balance sheet. And we're going through a hardware and software cycle. Obviously, software is going through a apocalypse right now. But it will make a comeback. And when it does, it's going to be rapid and it's going to be strong. And there's going to be people that are going to be wishing that they bought ServiceNow, Oracle, Adobe, CRM, Salesforce, even Microsoft. It's going to be a very, very violent push upward. On a closing note about SoFi here. So, I've been talking about SoFi on this channel a lot, and I really did not mean for this YouTube channel to very much be around SoFi as a whole. But understand that SoFi is going through a very unique period where the company is doing amazing things, but every person is literally nitpicking the ever shit out of this company now. So many people were frustrated because it wasn't necessarily a triple beat, because they really didn't like raise and beat on their guidance. If you actually look at their EBITDA, if you look at their revenue, if you look at every single thing that they're doing as a banking disruptor company, they're eating away market share from other banks. Like, this is something that people are really not understanding. And what people are really missing is that the member growth on SoFi is exploding. SoFi calls it, like, you know, they call their ecosystem pretty much like members, pretty much, right? But it's essentially anyone that has a SoFi, you know, bank account, checking, or maybe has a student loan, or maybe a mortgage or anything, right? Their ecosystem is exploding. And we're going to be seeing a tremendous amount of people. Like, how long is it going to be before SoFi has over 20 million, like, people with SoFi? It's honestly right around the friggin' corner. When I say the corner, I mean it could very much be within the next, like, year or so. And that's going to be a very big milestone. Very big milestone. Like, to go ahead and see SoFi with that many, like, members, it's going to be unreal. And the fact that they have right now 14.7, I just had to Google this because I honestly couldn't remember if it was 14.2 or 14.7. 14.7 total members at SoFi. That is 35% year over year. Like, you're talking potentially next year they're going to be at 20 million. That's going to be massive. And then how long is it going to be 30 million? And then what about like just completely exploding? Because you got to remember one thing on a closing note here for today's video. When you get someone that's very loyal to the brand, because that's essentially what SoFi is, let alone any bank out there. But when you get someone very loyal to a brand, they also tell other people. And how many of those 14.7 million, like, members have told other people, friends and family, yo, I'm getting, like, a lot of crazy, like, great savings, you know, APR, you know, they have really good, like, products here. They basically tell you what you can do for, you know, leftover money. They're a fintech. You should definitely check them out. If they get to 20 million, just go ahead and say, how many of those people are going to be recruiting other people? That's a thing to really keep about. So SoFi is very much going to hard-term pain right now. I'm very bullish about the new Fed governor coming on in. I think that the guy is very spoken for the market. And I think that the market's going to be getting a lot of surprises in a good way. So take everything I said with a grain of salt. As always, do your due diligence. If you enjoyed today's video, definitely smash the like button here, and I'll see you all in the next one. Later.